Hi to IPO subscribers. Welcome to eaglelive.ai. Today, let us review SME IPO from KWICK Forensic Solutions Limited. Here we go on IPO review. For subscription of any IPO, what is the most important factor? That is the financial status of the company. So this is the financial status and performance of the company as generated by AI-powered software. This company has been categorized as a healthy company. Let us see what are the financial strengths that made the company healthy company. So first is health analysis, solvency. Solvency ensures the sustainability of the company. Here all are positive. All the metrics are positive. So solvency is very strong. Coming to liquidity. Liquidity ensures the survival of the company. So here also all the metrics are strong. So the company is strong and financially and sustainability also strong. That is the reason why this company has been categorized as a healthy company. Let us go to operational efficiency. Operational efficiency, this will be changing from time to time. So depending on their position and business position. So here, gross margin 24.4%. Of course, it varies from company to company. So it doesn't matter. And receivable turnover is generally we expect 7 to 8. It is 4.95. Okay. And coming to financial irregularities, no financial irregularities have been identified in this case. So good. And the profitability, EBITDA 19.07, EBIT 18.58, PBT 18.21, PAT 13.51, cash profit 13.99, EPS 8 rupees. EBITDA margin 18.01, very good, close to 20%. Net profit margin 12.78, very good. ROC is 44.8, very good. ROE is 38.98, good. And book value per share is 24.53. Okay, good. So cash flow from operating activity is 7.62 plus, and net cash flow per day is plus 1.14. Good. Market value 90 rupees is the cap price of IPO. And based on that, price earning ratio is coming to 11.25, very good valuation. And price to book value is coming to 3.66. So a little bit higher than what is required. That should be less than 3. So let us see projected PP and PE also, then we can have an opinion on that. And coming to growth indicators, all are positive. Whatever metrics are available, all are positive. So the company is a healthy company. So we can have an evaluation. Now let us go on IPO review. This is the IPO review of the company. KWICK Forensic Solutions IPO, attractive valuation, strong industry growth, but are the risks worth the taking? Risk worth the take, right? KWICK Forensic Solutions is entering the IPO market with a 50.77 crore SMA IPO at a price band of 85 to 90 rupees per share. The issue opens on 27th August and closes on 31st August 2026. Business. KWICK Forensic Solutions is a specialized forensic technology company. What they do? Core business, forensic science solutions, crime scene investigation products, fingerprint and physical evidence kits, cyber and digital forensics, DNA forensic solutions, evidence management system, social media analytics, handheld forensic device, mobile crime scene investigation vehicles, equipment rental, installation, and training. So, customer base, police departments, central and state forensic laboratories, crime investigation departments, fingerprint bureaus, police training academies, universities, government and private institutions. Good. So, investment story. India is becoming increasingly dependent on digital evidence, creating structural demand for cyber forensic and evidence management solutions. Industry opportunity, forensic plus digital forensics, high growth chain. Yes, high growth. There's a good amount of there's a good growth for this business. According to the company's stated market opportunity, Indian digital forensics or forensic technology market is 1,600 plus business, expected market size by 2030, 11,800 crores, estimated growth 16 to 40% CAGR, rising cybercrime and digital transactions are increasing demand, government investment in forensic infrastructure provides additional support. Key message, the industry opportunity looks much bigger than the company's current scale. The question is whether KWICK can capture this growth profitably. So let us see IPO structure. It is total IPO is 50.77 crores, fresh issue is 41.05, YFS is 99.72, price band is 85 to 90, main is working capital. Okay, very good. Working capital requirement 31.42. So balance amount is for expenditure. So next is a large portion of the IPO is a fresh issue, which means capital is being raised for the company's operations and growth rather than be entirely an exit for existing shareholders. Okay, somewhat good. So valuation, the key investor question, P 11.25 at the upper price band of 90 rupees and EPS is 8. P 90 divided by 8 is equal to 11.25. Why this is attractive? P is relatively modest. Company operates in a specialized growth industry. Financial year 2026 revenue increased to approximately 105.8 crore from 65.08 crore. Financial year 2026 profit after tax increases on approximately 13.51 from 8.66 crore. So, but PB 3.6. So, this is not a deep dive because PB is more than 3. So my valuation will be that P attractive, PB premium, earning growth strong, overall valuation reasonable, attractive, valuation metric 7.5 by 10. The valuation is one of the strongest positive of this IPO. Financial performance, the company has demonstrated strong recent growth. See, take the case 24 to 26. Revenue 30.26 to 65. 105.80, PAT 2.83 to 13.51. Revenue and profit have expanded significantly over this period. Good growth is there. Key metrics, ROE 39%, ROCE 45%, PAT margin 12.8, debt equity ratio very low. Those numbers indicate good profitability and capital efficiency, although investors should still monitor cash conversion and working capital requirements. Promoter and governance, promoter holding pre-IPO 88.54%, post-IPO 64.65%. Okay, good. So positive, significant promoter ownership, experienced management, continued promoter economic interest. Concern, past corporate compliances discrepancies, certain companies act non-compliance instances, related party business in the same sector. It's common. Investor takeaway, stronger promoter holding is positive, but governance business monitoring. Key risks, working capital risk, 31.42 crore IPO proceeds is earmarked for working capital, so it should be used properly. It should not be misused because we have one section 186.2 that allows the companies to invest in other companies also. So that should not be there. So governance risk, past compliance issues need to be monitored. Related party risks, business connected with related parties in the same sector may create potential conflict. Growth execution, the forensic market may grow rapidly, but KWICK must convert market opportunities into sustainable earnings and cash flows. SMA IPO risk. SMA stocks can experience higher volatility and lower liquidity than larger listed companies. Market sentiment. Currently positive, but highly speculative. The IPO has attracted strong grey mark interest ahead of our opening. On 25th August, one market tracker reported GMP of 64 rupees, implying roughly 71% over the 90 rupees upper price band. However, another tracker reported 61, showing that GMP figure vary by source and can change rapidly. Important GMP not equal, not equal to guaranteed listing gain. Yes. So grey market premium are unofficial and can change sharply before listing. Also, the IPO has not opened for subscription yet. The issue is scheduled for 27 and 31st, 2026. Market sentiment score 8 by 10 positive, but I would not make the investment decision based on solely on GMP. Investor scorecard. Business model strong. Industry potential strong. Revenue growth strong. Profit growth strong. ROI ROC strong. PE attractive. PB premium. Promoter holding positive. Governance watch. Working capital watch. And market sentiment positive. SMA risk high. Final investor view. Subscription with caution. That will always be there. So positives, strong niche business, attractive forensic, digital forensic growth opportunity, strong recent revenue and profit growth, attractive 11.25 PE, high ROE and ROCE, strong promoter holding, positive pre-IPO market sentiment. Concerns, 3.66 PB is not cheap. Working capital requirement is significant. Historical compliance issues, related party concerns, SME liquidity and volatility risk. Final verdict, attractive valuation plus strong growth, but the governance and working capital need watch. I told you, there's a risk of diverting the money into other companies. So fundamental view, positive, valuation attractive, market sentiment positive, risk moderate, high. Overall, subscribe with passion. This is what we use finally. Closing question. KWICK Forensic Solutions offers strong growth at an attractive PE, but is the valuation enough compensation for its governance and working capital risks? Thank you very much for watching this video.